proportion-wise, Brazil still accounts for well over 50% of global Arabica production. And that share has quite interestingly grown year on year on year. So then looking at the same thing on the Robusta side, again, over the last 20 years, we see some changes, and the absolute production number back in late 1990s, Robusta production was about 42 million bags, and last year that climbed to 74 million bags, and that's actually a far greater increase year on year of 3% than the growth that we've seen in Arabica. And again, most of that growth has been driven by the likes of Vietnam and Brazil. So in terms of Robusta, the top 10 producers are a lot more concentrated to 3 very dominant players, especially more recently that happens to be Vietnam, Brazil, and Indonesia, that account for over 75% of Robusta production. And what's been really interesting is how the growth in Vietnam has taken place, and also in Brazil, and how the areas, the acreage that's been planted has evolved, and the yields have really grown quite exponentially for these Brazil and Vietnam, 2 players to essentially dominate the Robusta market. Now that's on the production side that we've seen these trends. But also interestingly is when we look at exports and try and use exports as a proxy for global demand, if we combine Arabica and Robusta production together and we look at the exports together as well, what we've noticed in the late 1990s, global or total exports were around 80 million bags, these light blue lines here. And the top 10 exporters accounted for 75% of the world's exports. So it was a lot more diverse, let's say. Then 10 years after that, we noticed, well, globally exports are going up because the consumption is increasing. And then the top 10 exporters actually concentrated even further, and they accounted for 86% of global exports. And now where we are more recently, what we notice is, again, exports have increased as the global demand for coffee has increased. And actually the top 10 exporters account for 90% of global coffee exports. So it's hugely concentrated in just a handful of players that are supplying the world with coffee through their exports. And it's also interesting to notice that those top 10 exporters over the past 20 years have changed. And more interesting, if we go into the recent years and the evolution of just the top 2 exporting origins, it's quite interesting to notice that back in 1990s and 1995, so this is a chart of the share of the top 2 origins of total exports. And the 2 big exporters back then in 1995 to 1999 was Brazil and Colombia. And this is total exports, is Robusta and Arabica. So Brazil and Colombia were the sort of main exporters to the world. And they accounted for approximately, let's say, average 35% of global exports was dominated by 2 origins. So not very, very concentrated. But since then, what's evolved is the 2 dominant exporters, Brazil remains, and Vietnam has emerged because of the growth that's taken place in Robusta in the country. And we've also noticed an increase in the concentration or the share of these top 2 origins that are responsible for the world's exports. So essentially last year in 2019, Brazil exports and Vietnam exports accounted for just under 55% of global exports. So like on the previous slide, we were mentioning that 90% of exports are dominated by 10 countries. What we notice here is actually 2 of those countries account for almost half of that. So there's even further origin concentration that's taken place, especially more so in the last 10 years than what we've seen in the previous 20 years. So it's this really interesting production side dynamic that we see evolving in the coffee space. And it's quite important to monitor this because it means that the smaller producers, like we saw in the earlier slides, such as El Salvador and Kenya and Costa Rica for Arabica. And also, I forgot to mention, on the Robusta side, we had players such as the Ivory Coast, which was much bigger 20 years ago, and Malaysia and Thailand. And they've all sort of fluttered away in terms of their exporting abilities, as well as their production abilities. And now we're left with a market that's essentially highly concentrated on just a few origins, and that has its risks that are associated with it itself. And some of those risks could be such as if there is a drought or if there is a frost, both of which are being talked about currently. Brazil frosts and droughts in Vietnam. And if we are reliant, or if the world is reliant on these two origins, and those two unfortunate events were to occur, it just shows the sort of supply side shocks that we could anticipate, or that we could see in the future, perhaps, because we're so concentrated on a handful of origins. And it is a similar sort of situation in other commodity markets. The most noticeable one would be the cocoa market, and also some of the grains markets as well there. But the nature of coffee growing in comparison to grains is very different. The nature of government intervention in grains and other commodities, and the tariffs and the trade wars that we see in other commodities is also very different to what we notice in coffee, which seems to be a bit more purer and less regulated than other commodities, which again has some downsides to, and perhaps explains why we've got to this situation where we are today, where some countries are just unable to compete and unable to perform in their production increases and decreases. Production increases more, and that's resulting in some production decreases. So just to highlight that that's, you know, the current situation that we're in. There is a lot of origin concentration that's taken place, especially on the exporting side of things. Now I just wanted to spend a little bit of time talking about what is the main drivers, or why have we kind of ended up in this situation where Brazil and Vietnam essentially have been able to grow, and some other countries, whilst others haven't. And I guess it all comes back to the investment that's taken place, or the ability to invest in land, because of the prices that some farmers are able to achieve whilst others are not. There's a few drivers of why there's productivity gains in some countries and not in others. And I know that you've had previous webinars that have looked into this in a lot more detail, so we're not going to spend too much time. But this is just a list of, you know, if you have increased technology or research in a country, and Brazil is a good example. So Brazilian agriculture itself is a big part of the GDP in that country, and because of the diversity of crops that grow in Brazil, there's a lot of research institutions that are well funded and let's say politically very good at getting the right funding and research and development into commodities, into varieties of different types of crops. And they've really been able to spread that research across the country. And especially when it comes to coffee, looking at coffee varieties, looking at areas of growth, where's more profitable, where's the best environment to grow coffees, while some other countries haven't really had that sort of agricultural investment on the top level from the government side of things. And they've sort of haven't been able to grow on the research. And the other big driver, in my view, of how some countries are more efficient than others is the average size of farms that we notice that differ quite widely country from country. And it's the access to land, availability of land, and the cost of land that influence that. And typically coffee and cocoa, unlike all other commodities, you have much small scale landholders or small scale farmers than you would see in any other crops. A few other points is how efficiently fertilizer is used, if it is used, what sort of access to financing some of these farmers are able to get and then reinvest, and if they are able to get financing or not. And other sort of technological advancements such as irrigation or access to water, and when they're applying the right irrigation or not enough irrigation. etc., etc. So there are some key factors that drive production growth in some countries and not in others. And just briefly looking at something, I looked at the last 20 years and how average yields have sort of grown or not grown in some of the regions in some of the countries, and this is in bags per hectare. So the most striking one would be Brazil, and they've really been able to increase their efficiency just in the last 20 years. So they've gone from about 17 bags per hectare back in 2000 on the Arabica side of things to almost 23 bags per hectare in the space of 20 years. Similarly, Colombia has done very well, but more recently in their yield development in the last 5 or 6 years, and they're catching up slowly. And Honduras, as I mentioned earlier, they've been the countries that have really sort of been able to increase their efficiencies, increase their farming practices to enable yield growth. But then there are other countries, and most of those countries are actually dominated in Africa and Central and South America, that we see that the yields have not been as successful, or the yields have actually deteriorated, most noticeably in Peru or in Guatemala, and to a certain extent in PNG. And other countries have remained quite flat, such as Tanzania. There's no real growth there in yields that we've seen in the last 20 years. And Uganda, there's a little bit, but overall, it sort of stays quite stable. So it's a similar kind of trend. Well, actually, it's very different for Robusta side of things, because again, the production is very concentrated in a few countries, and the most interesting one there has been Vietnam. And okay, so the yields in Vietnam are quite extraordinary. Back in 2000, they were sort of averaging below 30 bags per hectare, and now they're almost 52, 53 bags per hectare, which is just a remarkable increase. And that it really stands out as the country that's grown the most, which is why it's the biggest Robusta producer in the world today. And then Brazil has closely followed as well with the Conilon yields. Of course, they had impacts by the droughts in 2015 and 16, and that sort of incorporated in this number. But still, they've sort of maintained this 30 bags per hectare, and if not more, higher in recent years as well. So the two, you can sort of see quite clear trends as well in the Robusta side of things, where other countries' yields have stayed very stable or have sort of stagnated, but then the real growth story there has been Vietnam and Brazil on the Robusta side of things. So there's just one factor that I mentioned earlier was the average farm size, and I just wanted to show how it varies across the countries, and this is quite telling. So Brazil is able to benefit essentially from economies of scale, having a really large farm size on average, and that could be up to 66 hectares per farm. And of course, it will not all the farms. This is not an average. Well, it is an average farm size, but some of those farms will be much smaller in Brazil, and half of those farms will be much larger in Brazil as well. But the average farm size is quite extraordinary. It's at 66 on average hectares that a farmer in Brazil will own, compared to somewhere like Uganda, which is closer to or less than 2 hectares per farm. So you kind of understand why some countries are able to benefit from the efficient yields and economies of scale, and things such as mechanized harvesting, a bit more precision harvesting, and investing in technology, is because they've been able to expand through much more larger farm sizes. Similar sort of situation in Robusta, where Brazilian farmers in general are much higher, around 22 hectares per farm. But what's interesting here is, even though we've seen huge growth in Vietnamese yields, it's not really the area planted or the acreage that's driving that, because the average farm in Vietnam is still relatively quite small, especially in comparison to Brazil. It's more closer to 2 or 3 hectares per farm ownership. So the real driver in Vietnam for the yields is fertilizer, and the amount of fertilizer that they are applying per hectare in the Robusta is by far the highest that we've seen anywhere in the world. And that's really the key driver of how they've been able to grow their yields almost exponentially year after year. And that's the sole reason in our mind why they do so well. Similarly, access to fertilizer and the cost of fertilizer is a very big driver in why yields can increase in some countries and why yields are so poor in others. So we notice again on the Arabica side of things, Brazilian farmers are able to apply a lot more fertilizer than any other Arabica growing country, and that averages about 25 bags per hectare. They also benefit by, so a lot of countries have to import fertilizers, but there is local production in some of these countries of fertilizers, so they're not so influenced by currency fluctuations. So as we see now, for example, the real has weakened quite a bit, which we'll look at in a few slides later. And then the cost of importing that fertilizer consequently has increased for a Brazilian farmer. And that's going to have an influence perhaps in future years, but it's a little bit early to say at this stage, because obviously we're going through the harvesting period and fertilizer is not an important factor. But having access to domestic fertilizer use, or creating own fertilizers, or a country having fertilizer available internally, has a big influence, rather than having to import fertilizer. And the cost of fertilizer has a big role on how yields have grown in some countries and not in others. So then, I mean, I put a slide on here on access to finance, but I don't want to spend too long on it, and I couldn't find a chart that explains it very well. But financing is very important to a lot of the countries, and there are still challenges that remain, and very high interest rates in some countries, whereas others have benefited from, let's say, government incentive schemes with very low interest rates, and others don't have those opportunities. Other countries don't have that opportunities, and generally agricultural sectors receive less financing on the farm than any other sector, let's say, compared to tertiary financing. So there is a sort of gap in the market for some of these areas compared to others, and there's quite an extensive study that the ICO did on this that's interesting and worth reading. So now the other factor that I wanted to look at is sort of the influence that currencies have on production and prices that a farmer is able to achieve. And this is a study again that the ICO did, and they looked at they categorized countries into low income and middle income and upper middle income, and they looked at the proportion of coffee exports as a proportion of their total country's exports. And this is slightly old data, but I think it sort of shows a bit of a picture. And it mentioned, what's interesting is, for example, Uganda and Ethiopia exports from the country account for just under 20% of the total country's exports of all commodities, let's say. And they're a low income country. So it just basically means that they have a bit more, their coffee business or their coffee exports is a lot more exposed to coffee price fluctuations because that's a big part of their exports compared to some other countries. For example, Brazil, in contrast, Brazil obviously exports huge amounts of grains, soya, corn, and sugar, as well as other like orange juice as well. So coffee doesn't play a huge role, as it's not a big proportion of the total exports that Brazil does, and similarly Colombia as well. But they still nevertheless have, on a country-wise, on a GDP-wise, exposure to currency fluctuations. And just to sort of extend that a little bit further, if we look at the proportion of exports, and this is focusing on Arabica, as a proportion of the country's production, so essentially what we're noticing is that Uganda, countries such as Uganda, Peru, Nicaragua, export over 95% of their production, in essentially saying that the global or the domestic use of these coffees that are grown is very limited, and most of the revenue that has come about from these countries is via exports. Similarly, what we notice, it's the same sort of thing for Honduras and Colombia, and then it really starts to fall when we get to countries such as El Salvador or India and Ethiopia. Ethiopia being the interesting one because there's a lot of domestic consumption there, similarly with India as well. There's a huge amount of domestic consumption that means that all their exports of Arabica, all the production of Arabica is not exported. And to a certain extent, that limits their exposure to currency fluctuations because they have a domestic market that in theory would pay a stabler price than relying solely on exports. Interestingly, Brazil as well accounts, well, this is just the Arabica side of thing, 90% of their production is essentially exported in one way, in one form or another. So just to extend that a little bit further and relating it back to coffee prices. So the blue line is the chart of Arabica futures prices, and the yellow bars in this chart above show Brazilian exports as a share of total Arabica exports. So more recently in 1819, Brazilian exported, so out of the total Arabica exports that took place that year, Brazil was responsible for 45% of those exports. So that's again a huge share that Brazil has in the world of Arabica demand, or Arabica exports, let's say. And the reason why I wanted to stress this is, or the ability of Brazil to export so much production, so much of their production, and other countries not having such a big share, has been the currency influence. So we're all aware that prices, let's say for the last 2-3 years now, have not been very attractive for a lot of producers. They've sort of stayed around, they've trended lower certainly since 2017, and they've kind of stayed averaging about just above $1 or 105 for the last 3 years. So it's in dollar terms, it's not a very attractive price for many producers. But this is where currency fluctuations can have quite an influence. And so what we did is we looked at the again, the futures price, the front month futures price, and we converted it into Brazilian real rather than US dollars per pound, US cents per pound. And what we notice is quite different to the earlier graph. So where we had prices trending lower from, say, 2017, the prices actually from 2017 have remained quite stable, and more recently have actually gotten to record levels. And this was just about 3 weeks ago. And the reason for that, again, is the currency massively weakening against the dollar. Well, the Brazilian real reached record levels against the dollar just 2-3 weeks ago. And it's actually remained quite stable for quite a long time, whereas, sorry, I went ahead. There's been a lot of volatility in dollar terms in terms of the prices and the price spikes and fluctuations. So really that's the influence of the currency that's had quite a big part in at least the last 5-6 years of keeping, let's say, Brazilian prices steadier than the world market prices. And also more recently, or more interestingly, that actually the farmer in theory is able to get record-breaking prices if they were to hedge at these levels, or average levels much higher than what they would have seen at least in the last 4 or 5 years, or actually much longer than that, maybe even the last 20 years. So, and of course, and the point is that this is more of a macroeconomic driver that's influencing a country's production, influencing a farmer's revenue on how much they can achieve in local currency terms, which has got essentially very little to do with supply and demand fundamentals influencing prices. In this respect, it's more to do with the actual currency. And actually moving even further into that, a lot of emerging market currencies have weakened over the years. So for example, the Colombian peso as well. So this is a chart of, again, Arabica futures prices normalized as of 2010. So the green line is what prices have been doing excuse me, in US dollars per pound, and the other coloured lines are the futures prices converted to local currencies. So the Brazilian real is basically that chart that we saw before, but normalized as of the 1st of June 2010. And then this darker grey line is the Ethiopian birr, which has also weakened quite substantially in more recent times, and the Colombian peso as well, in the yellow line, is much weaker. So in theory, the comment is that if we looked at prices since 2010, and the rate of decrease, so actual coffee prices in cents per pound, have fallen by about 30% if we just look at the last 2 decades. But if you convert it into local currency terms, the situation is very different for quite a few producers. So, for example, Brazil in red, you've never really seen much negative prices, and they've sort of actually increased, especially in the last 6 years. Similarly for Colombia and Ethiopian producers. However, for Honduras, that currency hasn't weakened as much. And for example, Guatemala and Peru and Nicaragua, we don't see much volatility in those currencies, and some are even pegged to the dollar, which means that they've essentially followed the same sort of price direction as Arabica in cents per pound would have done. So their let's say prices in local currency terms are still down over the last 2 decades. If we were to look at it this way, they're still down about 30%. So it's really, this is where macroeconomics has driven farmers' revenue much more than, this is more of an external factor rather than a coffee-driven factor. And just generally speaking, if we these are all the currencies against the US dollar, obviously, the US dollar has strengthened since 2014 quite a lot. And that's, again, this is in relation to the US economic policy and the US governmental and the Fed rates and the monetary policy that's driving the US dollar. Against that, there's a basket of emerging market currencies in which Brazil is also a part of, and Russian ruble, and that impacts demand side of things that we'll look at later. And all of these baskets of emerging market currencies have essentially weakened over the last few years because of the US dollar strength, which is driven by Fed rate policies or governmental policies. So it's a totally external factor that's helped some coffee producing countries and not so much others. That kind of has an interesting dynamic on the coffee market world and part of things. And if we were to just concentrate a little bit more in the last 5 years, it's a similar sort of trend, and actually it's worse for coffee producers where the currencies haven't fluctuated as much because prices are down more than 33%. That's the green line, just the Arabica futures. And again, Brazilian producers are really the ones that have benefited the most more recently in the last year or so, just through their currency fluctuations. And this is normalized just after the rally that took place in 2014, 2015. So it's really just to make the point that the currencies have an influence on farmer revenue. And so coming back to some of the mild producing countries, so why have we not really seen much growth in washed Arabica, especially across Central and South America? So as I mentioned earlier, a lot of their currencies have not fluctuated as such. And generally, as this green line shows, coffee prices have trended lower over the last few years. And this obviously has implications for farmer revenue and the prices that they're able to achieve and their efficiencies, and they're reducing or they're increasing costs of production, let's say, because they're unable to have an attractive price. So we did, as part of our crop surveys, we've asked farmers, especially, let's say, 8 or 9 months ago when prices were really quite low, and we sort of said, well, why would you continue growing coffee? Or generally, as we've noticed, that coffee production in many of these countries has not really increased, especially in the last 5 or 6 years. Mild production has relatively stayed quite flat, as shown in this graph below. And it's interesting because when you ask these farmers, a lot of countries in Central and South America have had, and we must have all seen it on the news as well, have had members of their family have migrated to the US in search of better job opportunities and in search of better incomes, which they certainly weren't getting from farming activities in the agricultural sector. And parts of their families had stayed behind to continue coffee cultivation, perhaps not to the same extent that they would have done in earlier years, but they owned this land, or they sort of had coffee farms available to them, so they continued producing. However, their income was substituted, or they had additionally monetary support from outside, basically from other countries, and or their family members that were working other jobs in other countries that were supplying a dollar income to them, which helped some farmers in some regions continue to produce coffee, not because of the coffee prices that they were getting. And this is something that we noticed in Guatemala and Honduras, and also in other countries where the prices have not been attractive. And that's including the differentials that we have in coffee as well, over and above just the futures price, because that's one part of the equation. And obviously in some countries, differentials have stayed quite firm, which has helped more recently with farmer incomes as well. So just that was sort of like on the supply and demand side of things, well, the supply side of things, and why we're not necessarily seeing growth in some countries, but why Brazil has able to benefit from currency fluctuations, from yield and farming sizes to increase their yields and therefore increase production over the last 20 years or so. The other macroeconomic driver that I just wanted to briefly talk about, because I know we're running out of time, was the speculator funds. And there's a study that shows that automatic trading, so there's all these sort of different funds that drive prices, coffee prices, a futures price, almost like daily, and it's not pure supply and demand, it's not pure producer hedging or roaster buying or anything that's driving it day to day or second by second. There's also an interest of investment funds and speculators in the industry. And what we're noticing is the amount of automated trading across different asset classes is increasing year after year after year, but also in agriculture. So typically asset classes such as like FX or equities, you see a lot of high frequency trading. They're very liquid markets, prices fluctuate daily quite a lot, and there's a lot of machines behind it, and not to go into too much detail about this, but there's a lot of speculator funds there that not necessarily run by humans or old school funds. And typically agriculture was a sector where you didn't really see that sort of thing. It was much more price discovery. There's a physical commodity that you're hedging, and there's no sort of interest for these sort of high frequency traders, but there is interest in returns and yields, and also risk appetite. So when there's an appetite for risk, we tend to go into the commodities, or investors tend to look at commodities or as an asset class as well, in different times or during recessions or after recessions. So what we've noticed is there's an increase in automatic trading in the agricultural sector versus over the last few years. And that's also something that kind of explains, historically, we've seen that systematic funds, or if we look at the amount of speculator interest that we saw just back in 2018 and 19, so this is the net spec positions, they were sort of breaking their record. So they were selling the market day after day after day, and getting to record short positions. And this was perhaps nothing really to do with the supply and demand of factors, but more exogenous or external factors. And also one of the drivers, and these funds look at commodities as a basket, and one of the main drivers for perhaps a short bias was our spreads that we have in the market, or the futures spread, typically for Arabica, always sort of remaining in a carry. So if you were to, let's say, remain on the short side of things, so you sell coffee prices throughout the year and day after day, and then you roll it when it comes to an expiry, you're essentially able to make money because of the market being in a contango or in a carry, except when there are extreme price fluctuations, except when the market goes up quite a lot, and when there's, let's say, a big deficit on the horizon as well. So this was really just looking at if the red percentages or the negative percentages is if you were to stay short, how much money or what your return would have been, because we're aided by the market staying in a continuous carry. So it kind of encourages speculative funds, not always, but sometimes, to have a bit of a short bias in the market, and that can take prices to the extremes. Right now, funds are not to those levels before. And then very quickly, I wanted to talk a little bit about demand and similar sort of impact on the currency side of things. So again, this is a futures market converted to local currencies. And as prices have fallen, this obviously benefits some countries when they're importing coffee because their prices are obviously much lower. But other countries such as South Africa and Russia, which again are classed as the emerging market basket, have weakened over the time. So their cost of importing coffee has actually gone up by almost 50% over the last 2 years or so, whereas in other countries, essentially importing coffee is cheaper. So the last few minutes, I just wanted to briefly touch upon the demand trends that we're noticing. And really the growth in coffee consumption has been driven by these emerging markets, or these producing countries such as China and India and Vietnam and Indonesia, and emerging markets such as the Middle East, Egypt, Jordan, so a lot of Central South American producing as well as non-producing coffee countries are basically driving this growth in global demand, whereas the traditional markets such as US and the Western European countries, their growth in coffee consumption is not really growing to the same extent that we see in sort of some of these emerging markets, and they're a bit more flat or stagnated. Now, obviously, with all the situation that we're in with the pandemic and the lockdowns that we're seeing, there's a lot of talk about what coffee consumption is going to be doing and how we see it playing out, and with the out-of-home consumption essentially lost in a lot of the countries because we're in lockdown and unable to go out, and whether that's being substituted by in-home. And when we usually model coffee demand, we look at the biggest variable is the GDP per capita, and the theory behind that is in theory, coffee is a luxury product, and in many countries, and you wouldn't necessarily consume it unless you had the disposable income. So this is just a log graph of plotting GDP per capita against a country's per capita consumption in kg. And so what we want to emphasize is, yes, there is sensitivity to GDP per capita and people's incomes, but it's not across all countries, because in traditional consuming markets, they're not as sensitive to changes or recessionary factors or economic growth. In these countries, you wouldn't necessarily see a one-for-one change in coffee consumption. It's not classed as a luxury product there. So essentially 60% of the world consume coffee in this sort of blue shaded area, which do not have or are not as sensitive to changes in GDP per capita. Essentially, it's saying that it's a bit more inelastic to demand, to incomes, whereas crudely speaking, 40% of coffee consumption sits in this red shaded area, which is a bit more sensitive. So changes to people's incomes would change the amount of coffee that they were consuming. So that's a bit more elastic. But what's interesting is a lot of the shaded area in red is what the countries, the emerging markets, that have been driving a lot of that growth in coffee consumption over the last at least decade or so. So it's interesting to see what will the influence be if these GDP collapses, if with all the recessions after this COVID pandemic, or that we're already going towards, will have an impact on coffee consumption. But just very crudely looking at it and looking at bank forecasts for economic recoveries into 2021, we notice that it's more the traditional coffee consuming countries, so that 60% of the market, where we see a bigger impact on on recessionary impact, essentially as a post-COVID fallout, compared to some of the more emerging market origins that have been driving that consumption growth. They're not really seeing the same impact from COVID on their economic outlook. So it's suggestive of that we may not see a huge collapse in demand if we were to split this world into those two segments. However, obviously, each country consumes coffee in a very different way within the emerging markets as well. And a key, and I don't have time to talk about this in too much detail, but you know, out of home consumption versus in home, the share of that. And again, talking earlier about this income elasticity, again, each country is very different. How coffee is consumed in places like in India, a lot of the coffee is consumed in out of home, like offices and the workplace, and also little cafes on the streets have seen an emergence in most recent years. So generally, you know, every country consumes coffee quite differently. Our overall outlook is that yes, there will be a reduction in coffee demand, but not perhaps. There might also be a bit more of a blend switch as well. So as we move into more in-home, you can see perhaps not as much mild usage as what we've seen growing in previous years, and that could come off a little bit, or more usage of Brazils, or more usage of Robustas. So not a complete collapse in demand, and if there is, it's more of a short-term collapse because of the lockdowns. And we kind of need to see for the next 3 months how we ease out of these lockdowns and how people change their behavior of coffee consumption, or they sort of drink more coffee in home because people are not comfortable in going out again, or immediately going out again to cafes and bars, and certainly a lot of tourism will stop over the summer period in the Western Hemisphere. So we need to sort of look out for that, but that might encourage further coffee consumption. So it's a little bit all up in the air, but we need to monitor country by country really how those demand influences. But just a point to mention that a lot of the GDP contraction is not as big in some of the emerging markets compared to some of the traditional coffee consuming countries, which are in theory less sensitive to GDP growth. So that's just, you know, my final slide, a few key takeaways there to conclude. So we do, on the demand side of things, you know, the growth had been coming from these emerging markets over the last decade, and we don't think it will take another 10 years for that to recover, certainly not. And we just need to watch how sort of these lockdowns ease, et cetera, but you know, we are also forecasting, and this is something I forgot to show in this graph, we are also forecasting that global demand, emerging markets, let's say, or those emerging and producing countries will account for over 50% of global demand in the next 10 years or so. And that's really because traditional consuming countries are remaining quite flat, and basically these producing and emerging markets will exceed the demand that we see in our traditional coffee markets, which is an interesting dynamic. And on the supply side of things, it continues that Brazil and Vietnam are essentially able to continue to expand. Brazil with increasing efficiencies on the field, and Vietnam, if they were able to increase their land, they're already applying quite a bit of fertilizer and other schemes and research, and varieties of coffee can propel those countries because they've been able to benefit or haven't been impacted as much by the lower prices compared to some of the mild producing origins. So there is this already kind of very high origin concentration. It does pose risks. It does pose, if there are any supply side shocks, then there is a situation where perhaps there's not enough coffee, and you would need prices to sort of correct to encourage other producers to come on stream. But the nature of the coffee plant, you know, you can't produce it overnight, and it's more of a 2 to 3 to 4 year cycle, which is why we've seen a steady decline in some of these mild producing origins, and not an overnight decline in that respect. And lastly, there is a lot of external fund speculator activity in the futures market that can sometimes drive prices away from pure supply and demand factors, and they're difficult to predict when and how they come into the market, and it's more driven by a global asset class, or a global view on commodities, or a global view on the economics, or where investors or large funds want to place their money and want to place their assets. So it's very little sometimes to do with the coffee supply and demand of things, and there's a whole host of things that they look at which would take another hour to explain, but very intriguing, certainly. So I'm sorry that this was very, very rushed through, but that's all from my side.
Hannah, thank you so much. This was absolutely great. And I know that we are running a bit tight on time, so I will try and keep it short and simple. Hannah, what is your view in terms of domestic consumption in Brazil in view of COVID and the potential GDP contraction?
Yeah, so Brazil is probably the worst affected, categorized as Latin American country, and we're seeing Q1 forecasts were very poor already, and Q2 is expected to be much worse. So, I mean, in theory, we've taken down our Brazil consumption number by about 1.5% for this year, and it's quite striking, just the unemployment rates that we see there, and how that will change. You could in theory say Brazil is a bit more of a traditional coffee consuming country because it's more culturally orientated, and you could actually say that there perhaps would be more of a blend deterioration than a reduction in consumption. And it's really difficult to pin it down right now, because retail sales in the country were okay during the lockdowns, but it depends how people, if there's such high unemployment, they won't have necessarily the income to go for the higher end coffees, let's say, or the better quality coffees, because there was a growth in pods and capsules in the Brazilian consumption and premium coffees, and I think that will perhaps be impacted more than any other part of the coffee consumption. So, I mean, we're being a little bit conservative. We just have to wait and see, but we certainly do think that demand will be impacted. We've seen it before in like the 15-16 recession that Brazil, well, not recession, but downturn that Brazil had as well.
That's fantastic, Hannah. And maybe one last question, because I know that you have a hard stop. So with the bigger ones getting bigger, how do you see diversity in the future? And how will the smaller origins be able to compete?
Yeah, that's a good question. So just to take from the cocoa market, we have some origins in cocoa that have incredibly high differentials, to sort of encourage, or they've sort of detached from the futures market a little bit and have very higher cash prices to encourage that production to remain in place. But obviously they're much small scale producers, and that's been one of the reasons why you see sort of premium niche cocoa markets, and it's a little bit like the Costa Rican story, that the differentials have stayed quite firm there, which is why we haven't seen a huge collapse in production in the last few years, let's say. So that could be one of the solutions, or one of the sort of dynamics that we see in the coffee market.
That's fantastic, Hannah. Thank you so much. Really, really interesting webinar, and your perspective is really appreciated. I have for sure learned a number of new things. So thank you for that.
Pleasure.
And Guillaume, is there anything you would like to add?
No, well, thank you very much, Hannah. I think it was interesting as well. Let us know for the participants who's going to ask if we can share the slides or not.
Mm-hmm. Yeah, sure.
Your call, of course. I remind all the participants that we sent you an email for the feedback form. If you have any comments or suggestions, we're very happy to hear it. And in order to improve our next webinars, our next events, that's much appreciated. So, well, thank you, Hannah.
You're very welcome. Thank you all.
For rescheduling today as well. Have a great day to all, and we're looking forward to seeing you in the near future. Good luck, and all the best to everybody. Thank you very much for joining. Take care.
Thank you. Bye-bye.
Goodbye. Take care.